Welcome to the investment markets overview for the week ending the 13th of May 2022. Cryptocurrencies were in the news this week as the ironically called stable coins were anything but stable. The price of Luna collapsed by 99% in a single day, with many other cryptos now in the -80% club. Touted as a store of value and an inflation hedge, it's a reminder that cryptos and gold are not currencies but assets, albeit that gold has historically been very much a currency. And like all other assets, they rise and fall in value, with some assets going bust or disappearing during typical business cycles. Furthermore, as with all other publicly traded assets, they are subject to collective social mood swings, moving from extreme optimism to extreme pessimism. As such, a reliable system is needed to avoid the large falls that are inevitable within higher risk, higher reward assets such as cryptos and gold. The one-year charts of Bitcoin and dollar gold to the 1st of April show that we provide a great timing solution. You can check out the link to find out more, including a special discount available. The overview includes the performance statistics for the main stock indices, which were mixed, as were the commodities covered, and sovereign bond yields. Whilst cryptocurrencies were lower across the board, led by Monero's 34% slump. Meanwhile, our regional coverage discusses the latest US inflation figures and average real wages. Why the disappointing UK GDP numbers were hardly a surprise when observing disposable incomes. Whilst out east, there is a peak at falling credit creation. Currencies are important barometers of respective economies and also provide guidance on other asset classes where correlations are evident. So it is worth a look at the Russian ruble, which according to Joe Biden would crumble under the weight of international financial sanctions. Whereas politicians lie frequently, charts never do. Which is why we study them. The dollar-US ruble is inverted, or turned upside down to better show the performance pre and post the 24th of February Ukraine conflict starting date. The ruble was already weak against the dollar ahead of the conflict, but it collapsed by 50% as the tanks rolled into Ukraine, highlighted by the dark green line. However, it then rallied by 70% despite ever-increasing sanctions. The currency timing service worked fine here, and a link is provided to find out more. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. A one-month trial of this 40 times per year publication is available for less than $15, a whopping 70% discount. It's an ideal opportunity to grab the bargain for 4 publications. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview. Just follow the links provided, and if you're watching this on YouTube, then kindly give it a like as it helps our channel.